if I right click on the indicators in the settings and I load up the shutter trading comp indicator and I click on template reset, these are the values that you are going to see on your chart. So in the introductory video or the initial video that I released for this, I put it on a 20 range chart. So whatever chart you have on, there's just a few little adjustments that you may need to make, but we'll go through that in a moment. And we'll also go into the thought and planning around this entry as an example too. So let's have a look first at what we are looking at specifically on the chart, what everything means on the chart. So a lot of you have been coming back to me saying you would like some more detailed information on what is visually happening on the chart. So let's cover that. The first thing you're going to notice, okay, when you load up the chart, now I'm just gonna mess it up a little bit. I'm going to be dragging it like this, and I'm going to be, squeezing it like that. So we obviously don't want to do this with the chart. So if you ever find that your chart is out of sync, always just click on the F on the top right hand corner and drag the chart, the time scale at the bottom, where you can see the last significant previous low and the last significant previous high. So that is about right. You can also use this one over here and this one over here. That's also a good way of just lining up the chart. So that's a good view of the chart to display the momentum line clearly. So the momentum line is the cyan line over here, and it's got magenta in it and cyan. So when the bars are green, you're going to have the magenta color. When the bars are gold, primarily, you're going to have the cyan color. So that's basically the thinking and the coding behind this. Okay. Obviously, you've got the momentum line and you've got the coloring of the bars, and you've also got these arrows. So these arrows are basically divergence arrows when the price is hitting certain levels and the momentum line is showing the true value of price in a different direction. So that's basically what the arrows are going to be doing. So you're going to be seeing these arrows plot. Now, as I mentioned before, it's not ideal to be entering on every single arrow that presents on the chart, although most of the time there is a movement when these arrows happen. So just looking at the very last section of this chart, also if you right click on the chart and go to properties, it's a good idea to have a right side margin. So at least 120 is fine. Okay, and that just gives you a little bit of room on the right hand side of the chart. It's better than having, the price right up against the edge. You're also going to notice this white dotted line. So this white dotted line very often is following the price, and it's dependent on each bar that the indicator is loaded on as to what that line is doing. So we can look at this chart on a few different bar sizes and different bar types even. So let's duplicate this in a new window. Not a new window, let's do tabs rather. So let's go duplicate a new tab and let's choose a 5-minute chart. Okay. And let's duplicate this in another tab. And let's choose we've done range. Let's do a tick chart, a 200 tick chart. Okay, let's duplicate this in another tab. And let's go for a volume chart. Let's go 1000 volume. We might have to increase the amount of days on that. So make that 2. And what else do we have? Let's go one more, duplicate a new tab. Let's go to the data series let's see what other bar types we can put it on. I wouldn't use NinjaTrader with this indicator. It's not a really good bar type to use, for this. So let's go even Heikin-Ashi. So Heikin-Ashi, let's even go 3 minutes, and that's going to give you values too. So each different bar type you put it on is going to present different, because it's obviously using different time frames. You're going to see the bars plotting differently. So that's pretty obvious. So all dependent on which specific time frame you are working on. So like as an example over here, if you are on the 200 tick chart and you see this happening on the chart, it's a very good idea to exit the position if you are in a short. So depending on which bar type that you are working on is how you're going to read the chart and how you're going to read the price as it moves. So obviously this being a tick chart, you're going to have a lot of bars and there's going to be a lot of signals. Whereas if you move on to the larger bar types, you're going to notice a few less. So even going to like a 5 minute, you're going to notice, a lot less signals on there because there's obviously a lot more time and a lot more ticks that could be in that bar. Okay, so those are the different ones that you can look at. And as I mentioned, they're all going to read price slightly different. So whatever you are most comfortable with, I try and avoid the minute bars, for the simple reason is that every single bar is going to be a different size. So like that one's 120 ticks. This one here is 100 and it's actually more. It went right up to there. 145 ticks. You've got all these different bar sizes. Obviously you can have the ones that are very small. So it's extremely unpredictable and difficult to know where you're going to place your stops. And I know there's, people talk about higher highs and higher lows and all that crap, but 5 minute bars are basically a shit fight to deal with. There's no point in even dealing with minute bars at all. The really good thing about a specific size bar, like a 20 range bar, for absolute fact that each bar is going to be a maximum of 20 ticks. So when you enter a position, you can very accurately insert your stop loss at a specific tick value, and if the price reaches that value, you're out. Whereas with a minute bar, you're going to have all these wicks and they're going to knock you out of the market, because that's exactly what they are designed to do. Okay, so we'll just look at the 20 range chart on this example. You're definitely free to go and look at different charts, but this type of thing, look at this. It's all over the place. And, the last thing you want to go do is read hundreds and hundreds and hundreds of pages of candlestick analysis, head and shoulders, dojis, all that bullshit, because that basically just clouds your mind. There's so much information on minute bars, and, I haven't traded minute bars for many years because I believe it is, a completely manipulated bar, and that doesn't make sense. So I kill the minute bars. The same with the tick. You're gonna have different size bars on that. But then again, whatever you are really proficient at, whatever you enjoy trading, work with that. Okay, so I'm gonna specifically look at the 20 range bar. Okay, so when you see a candle like this, so this one here is like a cyan color, that means the price is significantly oversold and a very high likelihood that it's going to reverse. Now, I'm not just cherry picking what's on past signals. This bar, the moment that bar closes, it's going to paint that color. Okay, so I'm just looking at what the chart has presented. So if you had this indicator loaded up earlier, and if you even load it up now or load it on playback, this is what it's going to paint on that specific bar. Okay, so it's just what it does. So going back, you're going to notice that, and you're also going to notice these like tomato and deep red bars. So that also is an indication that the price is heavily overbought. Now, an important thing to understand, now I'm specifically going to scroll back like this. Now, if you have your indicator positioned correctly, okay, on the chart, you will always have the momentum line in the accurate location of where it should be. So if you scroll like this, okay, you will notice this momentum line. That is exactly where it is going to be at that current price. So you can scroll, and we'll just keep doing that. You'll notice that this was a significant push down. Okay, momentum line. So again, if you're buying on every one of these arrows, you're going to be, you're going to have trouble. But I've got a very good technique on knowing when to actually buy the price as it's doing this. We'll cover in a moment. So there we go, price, and then it got to excuse me, it got to the heavily overbought. Now, when the momentum line has reached sky high like this, that is showing you like this is heavily overbought. There's a high likelihood that price is going to change. But it's also way above the price. So you want to resist trading against the momentum line. The momentum line is an extremely important tool to identify the strength of a trend. So even though this is showing significantly overbought, if you're going to enter short positions based on this, as you can see, it's going to take you out of the market. Okay? It's only when this momentum line changes direction that the chance of this price reversing is a lot higher. Okay, so looking at this, now the momentum line is coming together with price. Okay, and we'll just scroll on a little bit. There, it's dropped below price. You've got gold bars that's telling you the price is in seller's territory. There we've got a basically a divergence that's telling us, okay, there's a likelihood that this price is going to reverse. Momentum line is very close to price, which means that the major uptrend that was previously happening here is over. We are kind of in no man's land now, and the momentum line is going to again tell us what the case is. There we've got some green bars telling us that the price is in buyer's territory, and we'll look at some of the settings that determine that in a moment. We've got some divergence arrows, momentum line facing down, telling us obviously first of all the bars are gold, which means the price is now in seller's territory. A good idea to going short. We've got some divergences. Momentum line is facing beautifully down. And then so on. Now it's going up again. So a little bit of indecision in this range. So when you're seeing green and gold bars together, that means that it's a major tug of war between the buyers and the sellers. So you'll see that for a while. Just after the 4 p.m., a bit of indecision over there. Okay. So a good thing to do too would be running this on playback. Just running it on a fast playback, seeing what it does in real time, seeing what it does on playback using market replay, so you can get an idea of how this momentum line, works and how it actually runs with price. And this is where we are right now, you see. So what happens over here? Okay, so we have, scrolling back to this part here, okay, we have the momentum line above price, meaning that there's a very high chance of a reversal, which is what happened over there. And also this bar is going to color this price, or it's going to color this color when it is beyond these support and resistance lines, which we'll cover in a moment too. So they just provide the extremities of likelihood of price reversing. So if you only work with those, your chance of success is extremely, extremely high. So over here, what's happened is, the price went up, the bars are all green, the momentum line is starting to dip below price. Okay, notice how it has these little runs up. So very, very often, and this is what the banks and institutions and the hedge funds are doing, is they suck people into long positions, take out their stops. Suck them into long positions, take out their stops. Suck them into long positions, take out their stops. Or, suck them into short positions, take out their stops. Short positions, take out the stops. So they're basically trying to get rid of all the traders that they can by taking out their stops. But ultimately, they know what they are going to be doing with the price. Okay, they know what they're going to be doing. They have a plan in mind. Once they've taken out enough stops and fueled their positions, they know what they want to do. And in this case, it looks like they want to push the price down. And this momentum line is an extremely good tool to use to show you the true value of price. So when this momentum line is facing down like this, your chance of the price going down is increased drastically, especially when they have taken out stops multiple times. You can just imagine how many times, they have sucked people into buying and then taking out stops, buying, taking out stops, buying, taking out stops. This is what they do all the time. And as I said, in reverse, it's the same thing. They could be selling and taking out stops. So that's why often you will see this type of thing happen on the chart. So this momentum line, again, I can't stress this enough, is such an incredibly powerful tool or thing to look at when making trading decisions. Now, I haven't been trading today on this chart. I just switched to this call a few minutes before I, jumped on this. And I initially actually entered a short position over here. So you can see my marker on the chart is over there. And I had a short position. The momentum line was beautifully down, but I also made sure that my stop wasn't too far away. So I initially had my stop over there, then I thought I'll just lift it up a little bit and put it over there. And unfortunately, I just got stopped out. Okay, so this is going to happen. And this is why it's also good for you guys to keep a trading journal on what you do, to see how often this type of thing happens, where you enter a position and you just get stopped out. Now, it's also very good to have a specific stop in mind when you're entering a position. So don't be somebody that, I know this is very, very tricky to explain and understand, but don't be somebody who enters positions and then keeps moving their stop up, hoping that the price is going to reverse. Because what you will notice often, if, say, for example, you did this over here saying, oh, the bars are tomato, the bars are dark red, there's a very high likelihood it's going to reverse. So you keep moving your stop, and then before you know it, you've got, you've been stopped out for 100 ticks, and then, you're in trouble. So you don't want to be somebody who continually moves their stop. Be happy with, putting your stop in a location. Note where you're putting it. Like initially, definitely for this type of situation, I'll explain in a moment why, the stop, was there. But, that is what you should be looking at, is, making sure that your stop is in a position where it's obviously not going to negatively impact your trading account if it does get hit. And also, it's not based on fear and, on hopeful thinking. It's based on a specific formula that you have, that you're going to enter a position and you're going to have a 40 tick or 20 tick stop. And again, that's why I love the range charts, or obviously the DTB bars have got, you know, special exact sizing of bars, because you can very specifically choose where your stop is, and you haven't got a chance of your price being spiked out like we saw on the minute bars. We've just luckily also seen this marker left behind. So when this marker is left behind like this, an extremely good indication that this price is going to go down. Okay, so the marker is above price, the bars are gold, the momentum line is down. I mean, you can almost put your house on this. You obviously don't want to do that, but you know, it's giving you a high probability. And the good thing about this too is you can come and move your stop. Now, there is obviously a chance that this price could reverse and go make higher highs. So you can't take anything for granted. I mean, you can't take a signal like this as a 100% definite event that this is going to happen with price. You have to be prepared for, you know, abnormalities, because, you know, who knows, they may not have taken out enough stops before they want to fuel and run this position down. So, you know, if this price comes and closes above this marker, you know, that's also a good indication that, you know what, maybe we should jump out of this position. So you could go and move your stop. I like to keep my stops as their fixed values, you know, whatever they are. I like to do that personally. You know, you can obviously reduce your risk as you go, but, you know, try not move your things too much. Obviously, if your target is, your target can be adjusted, but try have at least a 3-to-1 risk reward. So, you know, I've got like a, how many ticks is this? You know, this is going to be like a 16 tick. So I want to have at least, you know, 3-4 times that as my reward. So at least if you have 2 or 3 losing trades, you have 1 winning trade, you actually cover all your losses and then actually still make a profit. Which is why it's good to keep your stops nice and close to your entries, even if they get taken out, because you know there's going to come a time where this price is going to run beautifully, and, you know, and it's going to give you a huge reward. Okay, so let's have a look now at the settings. So, I mean, I can go back on the chart to any position, like, you know, anywhere on the chart, and then give you commentary on it, but absolutely a good idea just to watch the chart. So if you're watching this in playback and say you're running it at this speed, it's really good just to, you know, watch what it does. I mean, you can even scroll back like this, you know, and see what it does. And, you know, here's another perfect example of, you could see that, you know, the price running up, the momentum line showing us a huge diversion. They've gone up a little bit higher than they did before to take out stops. It's amazing how many people will put their stops a little bit above the previous high. You know, that's basically what a lot of people do. And, you know, like, say for example over there, so they put their stop over there. You know, they're entering a short position over here. They put their stop. And guess what? You know, you get taken out by 2 or 3 ticks and you wonder what the hell is going on. But, you know, that's what they do. You know, the banks and institutions, they want to take out your stops. They want to screw you out of the market. But have a look at this momentum line. This momentum line is right down, only had a very brief up. And then look at that, push down like tremendously. So the last thing you want to do is, you know, have a situation, you know, this is just showing you what happens. They're taking out your stops. It's okay if you entered a position over here, okay, as an example, and you had your stop over there. Great, that's fine. Then you go and, you know, you might go and have a 30 tick or 40 tick stop. But you know, as soon as the price breaks through again, you can enter your short position and, you know, have your stop again placed, you know, above, and then you've got a beautiful run down. Now notice that even though we've got arrows over here, Okay, this is very fast movement in price too. Okay, so this happened in a few seconds. So I'm not saying that you're going to be able to catch this very easily, but it's not always the case. I mean, if you look at, there are a few minutes for you to make decisions most of the time. But there was within a minute, the price ran right down all the way to the support area over here, had a little bit of an up and down to take out stops, and then, shot right up again. So these green lines, these red lines, support and resistance levels in real time for price. There we go. Price is in the support area, resistance over there, huge divergences, momentum line facing down, meaning very high likelihood price is going to go down. So a lot of you might be happy to chase 20, 40 or 60 ticks. Obviously, I think 20 is a bit low. I would say 60 is a minimum, especially if you're going to have a 20 tick stop. Try have it as as a 3, 2, 1. There again, we had a nice tomato candle, momentum line below the price. So it's extremely powerful looking at this. Over here, so this is an example of where you can also be caught out. Okay, so if you're looking at this, you're thinking, oh, okay, price is going up, momentum line is going up, I'm going to go long. Okay, but then, we obviously had the price return back down again. Momentum line changed direction. So if you're in a situation like this, if you're in a long position, rather just get out of that position as fast as you can, especially if this momentum line is changed direction like this. Don't go and think, oh, I'm just going to move my stop, and then, you're screwed. You're absolutely screwed. So this is why I said in the introduction, if you can trade this indicator and you can make consistent gains with it, then you've got the mind and the brain for trading, because you're not going to be sucked in to, first of all, over trading. You're not going to be entering too many trades. Like, imagine if you entered positions on every one of these arrows. You will lose a lot of money on that situation. So there's a few things to read, and there's a few things to see that, okay, price is 100% changing direction. Momentum line is changing direction. I need to be out of this position, and you could go short too, but, try have a set of rules that you're waiting for price to work through the support and resistance. Now, I'm going to show you a very, very handy trick in a moment, which is going to make a huge difference, which I haven't shared with you guys before. Excuse me, I still got a bit of a coughing fit. But, there again, price, eventually it's going to reverse. But, they're taking out stops. They are screwing people over all the time. Sometimes it's a genuine push. It's a genuine push in a direction. You're going to have consolidation. So as soon as there's a major price down, often there's a consolidation after that. So you could also be looking at that. You could be looking, okay, after a long trend in a specific direction, wait for the price to, have a bit of bouncing around, and then you can enter your positions based on the arrows. It's very often what happens. The price is not always going to be trending up and trending down. It's going to have periods of consolidation. And in those consolidation periods where the price is just bouncing around areas, those are incredible opportunities to jump in. So very often, very, very often, looking at the chart, you will notice that, the coloring of the bars, when they change like that, you've got really good opportunities to start looking for positions. And, when you are like that, notice the momentum line is above price, you really want the bar colors to change first, and, before you even consider being absolutely serious about a trade. Okay, so there we are. Okay, we're still very far. So, the whole time you're going to notice the momentum line, you'll see how it shifts above and below price, but just know that wherever it is on the right hand side of the chart is where it is in real time. So notice there it's below the price, and then you'll notice there it's joining with the price. That's going to happen. That is going to happen. Momentum line is facing up, facing up. Now it's saying, okay, guys, look for an opportunity to go short. Momentum line has changed direction. It's dropped below the price. And there we go. You know, you've got this momentum line is below the price. It is facing down. So you've got some arrows over here. Doesn't necessarily mean, hey, I should definitely jump out. Watch what the momentum line is doing. And if you really want to, you could move your stop down too. So, you know, keep watching the chart, what it does. And often, like I said, you know, consolidation, you're going to have little movements in price. So, you know, this is just a little bit of an in-depth, you know, again, I mean, you've got so many times where just this bar coloring here, you know, is a very high precursor of the market changing direction. It's not always going to be 100%. As you can see over here, the price did go and take some more stops out. You see, stop hunting. So, you know, it's not going to be 100% thing, but just remember, if you are entering on a bar like this, now if you are entering on like this, have your stop, you know, above the bar. So I like sometimes to just put my stop above the arrow. You know, that's going to give me not a very big stop loss. So even if you get in over there, you know, you've still got like a 25. You know, so work out first of all how much stop ticks you're willing to take. So obviously, if you're going to have a 25 stop, then you want to have at least like a 75 target, right? You know, which will be around there somewhere. You know, same thing over here. Be mindful of this, and you know, just because you get it wrong on the first entry, maybe you can take it on the second, but you don't want to go and add entries and add entries and add entries and move stops, because that will definitely get you in trouble. Okay. You know, again, over here, I know I absolutely hate going back on a chart and saying, hey, look, guys, if you enter here, you can make so much money. I'm not doing that over here. Okay, I'm not the freaking scammers like these marketing companies do, where they highlight specific things. I'm just purely showing you how the indicator generates signals. So over here, as you can see, the price momentum line dropped above. It's above price. A huge change over. Momentum line facing right up. See, I didn't even know what was happening there. Came out, took a bit more stops, but look how far the momentum line is away from price. It's another good indication that is the gap between where the momentum line is and where price is. So all they were doing here is just stop hunting. See, as you can see, slightly lower lows just to take out people's stops. You know, look at this. You know, as you can see, this stop, you know, they come down just a little bit lower. You see, just below the previous low, just to take out people's stops. It's fucking criminal, actually. Excuse my French. But, you know, that's what keeps the exchange going. That's what keeps the banks, you know, making trillions, right? But, again, our momentum line is telling us, hey, guys, this is the true intention. This is showing you the true intention of what they're going to be doing. This at the bottom here is them screwing you over to take out stops. But, you know, don't be sucked in to that. You know, especially if you have your entries right near the bar, you can have you know, slightly larger stops, but then also have larger targets. Okay, so I think enough about that. I mean, it'll just, you just got to keep looking back. You know, I hope what I've just explained to you here just shows you, you know, what happens on the chart. I mean, it happens all the time. You know, this momentum line is right down, price is spiking up, they're taking out stops. as soon as this momentum line shows down, you can enter those short positions. Okay, so we've covered more than enough about that. Let's go into, I'm just going to exit this position, not because I just want it out of the way, and then just so we can have a clear chart and not looking at any specific thing on the chart. And let's go have a look at the settings. Okay, so but look, still, we've got momentum line far from price. We do have a little bit of a change in color there. Okay, so this price could go up a little bit, but ideally I think this is going to come down. I mean, I'm saying I think, I'm not going to hold myself to that, and neither should you. You should never have firm beliefs and indications that the price is definitely going to go up or it's definitely going to go down, because that's only going to leave you disappointment. Okay, so settings. So let's go to the indicator settings and let's review them from top to bottom. Okay, so obviously the folder over here is going to be the explanation. So if you go into this folder, I'm going to put this video in this folder too, okay, or at least a link to it in there. It's just the information folder, and also where obviously the indicator exists. Sound alerts. So you can go and specifically choose to have sound alerts for the arrow. So every time an arrow paints, it'll play a sound alert. So if you're not sitting in front of your computer, or you don't want to be looking at the chart, you want to be doing something else, and you just want to be alerted if an arrow presents, you can pop the sound alerts on. Alert for divergences. So a divergence is when you have connected dotted lines. So whenever these connected dotted lines touch bars or they connect to other bars, that's going to sound an alert for that if you have that. And it shouldn't alert more than, in intervals of 90 seconds. It shouldn't. That's what it's been set at. Now, period length. Okay, so period length is specifically relating to the size of your bar. So initially, I would like you guys to really, stick with the range bars. It's just going to be extremely simple. Like I mentioned, every bar is going to have a specific size. So, you're not going to have different size bars. You're going to, that every single bar is going to be 20 ticks, or a range of 20 ticks. So if you're trading the New York session and it's a lot busier and you want to do a 30 range or a 40 range, just come in here and change this period length to the same value as your bar. Okay, now direction line. Direction line. So I'm going to activate the direction line. Click on apply. The direction line is the value of this momentum line. Okay, so whatever value this momentum line is, that is the value of this direction line. So as you can see, we're in minus 0.58. That means the price is in seller's territory, because obviously the bars are gold. Okay, so you can have this on your chart if you wish, but full well, what, the bar coloring is definitely going to help you. You'll see that as soon as this goes to, plus, your bar should turn green. Okay, so direction line, we'll wait for that to happen. And because this indicator works on each tick, it's going to be, pretty clear on that. Okay, so there we go. You see it went to the plus, and now the bars are green. So that is the value of this momentum line. So now the price is literally just in buyer's territory, but look how far this momentum line is away from price. Okay, we are just touching, buyer's territory, 1.1. It's coming back up to this resistance area. It could just be stop hunting. Remember, it's 20, 40, 60 ticks. The price has come back down. This could just be stop hunting before they push the price down. Or this could be just, a continuation. Again, do not be absolutely dependent or be sure about any signal that comes up. Okay, so that's that direction line. Now, the next thing, so this is the direction line, the colors, you can see green and red, you know, the width of it, you know, you can change the width if you want to make it slightly, you know, thinner, you could do that. And there's the center line. So the center line, if you draw the center line and I click on apply, this is going to be the 0 line. Okay, so this is the 0 line. So as you can see, this is 1.6 right now. Obviously, when it goes past this level to the downside, it's going to be minus. So this shows you where the 0 line is compared to where the momentum line is in its value. Okay, so those are just visual things that you can have on your chart if you really want to see those. And a direction line is probably a good idea. You know, this, I mean, if we, you know, direction line is probably a good idea. The 0 line, it's also pretty good. You know, often you could have, you know, the price touching or coming to the 0 line, bouncing off, you know, because remember that the 0 line is basically the point of, you know, the major tug of war. So often you're going to have the price bounce off that line in real time. So as you're watching this, you're gonna see what that is doing. Piss off. Okay. So you know, that is, you can have that on your chart. Again, you know, you can run it on market replay, and then you can see what it is doing, and then you can go from there. Okay, so those are those two lines, and as you can see, look, they're coming up to take out stops. Okay, so never be 100% certain on what price is doing, and especially, you know, you're seeing the breakout markers being left behind. You know, this could just be a continuation. So, like I said, never be 100% sure on what price is going to do, even though this indicator gives a tremendous amount of signals, you know, that you can act on. Don't be like 100% certain of them. And, you know, if you can do that, you know, have the right stops and targets, your probability of success is extremely high. Okay, so also see this little diamond over here? Somebody asked me, what is the diamond? That just shows you the first bar of the day. Okay, that just shows you that a new day has started, and that's the bar of the day. So that's just going to that's all that is. It's nothing. It's not a diamond opportunity to enter the market. It's just showing, okay, now we're starting to calculate. That's the first bar of the day. You know, this is what we're doing. Okay, back to the indicator settings. I'm going to get to something really powerful and important in a moment. So if you guys are watching this video still, you will definitely be rewarded. You know, especially if you want to be successful trading, you know, this tool will definitely give it to you, but I'm going to share something in a moment that'll really increase your chances too. Okay. Okay, so we covered the center line, we covered the direction line. All right, momentum line sensitivity. This over here is going to be the sensitivity of it. So this one over here, you can also have it to the value of the period length, but it is also okay to leave it at 14. But just have a look at what it looks like on your chart, especially if you're doing much larger bar sizes and you're doing like huge, like 100 tick, like 100 range or something. Just have a look at these values in here, because you want it to show you accurate signals. Okay, and the way for it to show you accurate signals is to scroll back on the chart and see what the momentum line has shown you in the past. You know, if you are seeing this type of a thing happen, then you know your settings are right, because it's actually showing you, you know, very good opportunities to enter the market. Okay, so that's what you're looking at for that. Going back into the indicator. All right, so we've covered that. Confirmation bars. So that is the amount of bars that the price has to go over to change over the color of the momentum line. Okay, so if I change this to 1 as an example, you will notice that you know, you're going to have a much slightly more coloring in that. So if we make this, if I make that like a 5, you'll see it's got less. You see there's less change in the coloring. So that's just the amount of confirmation bars, the amount of bars before the signal says, before the momentum line says, okay, this is, a valid signal. So all the way from here, as an example, with the 5 bars is like, okay, this is a sell opportunity. So that's also going to have an impact on the amount of bars. But now, as you've noticed, I've set this up as default, as 3. You are welcome to, adjust that slightly. I wouldn't put it less than 3. You can increase it slightly. It all depends on your stops and targets. Okay, the width of the momentum line, that's self-explanatory. Okay, the bar upbrush, okay, that's just the coloring if you're not painting the bars. You can choose if you want to use the confirmation bars or not. So that's an option to use them or not. You got the arrow sizes, paint bars. So this section over here, these color bars, they shouldn't actually be here because you're not going to even be able to use them. Now, there are definitely some features of this indicator that I have removed in this free version. Okay, so for example, you can't go and create an automated strategy out of this indicator because I've removed some of the key aspects in the back end, on this. And it's not to spite anybody. It's just that, I'm giving such a powerful tool out. I want you guys to manually trade this because it's gonna really help you, understand the market and work with the market. Look at that. We had this breakout marker left behind. Price has dropped below this resistance level. Good signal to sell, but also watch the momentum line. If you want to wait until this changes color, the bars change back to gold, also a good thing. Or you could enter a scalping position right here and have your stop there. So there's your 20 tick stop. Very small stop. Okay, so that's just looking at that right now. All right. Okay, so don't worry about the bar brush. Okay, paint bars based on support and resistance. Like if you deactivate that, it's going to stop painting the bars. Okay, so that's not going to help anybody. So just leave that selected. Don't worry about these colors. Draw support resistance lines. So these support resistance lines are these green lines over here and the red lines. So they are the green lines and red lines. Okay, so now getting to those specific lines. So when the price or when this momentum line goes to +8, those are the levels. Actually, it's got to do with the levels on the chart. So you can choose these levels. So you can go up to like 12, +12, -12, and you'll notice that those lines have changed, have gone down, and you can even make this as 10 and 10. So 10, 12, 10, 12. So that's just the level of these lines. So if you want to only trade the extremities of the values, you can select that. Now notice how the cyan bar has changed because the price didn't break through that. It's only when the price has closed below the second line does it change to cyan. So if you scroll back now, I think you'll find it very hard to see, or you may not see any of those colored bars. There we actually had one over there. So basically, at a very quick moment, the price had closed below that the support line and it changed color. Okay, so that is what that's going to do. It's you basically choosing a higher range of entry. So if you had this setting as an example, -10, -12, and you enter only when the price is in this specific range, enter a long, enter a short. You can also do that, and then obviously place your stops above that. So so that's a way to look at that. Now notice this marker left behind, bar turn gold, sell that. You've already got 20, 30 ticks in profit. You see what I was saying earlier? You know, momentum line has been facing down beautifully, but all they wanted to do was take out stops first. You know, they still want to push this price whichever direction. But they're at this point, basically at this point here, okay, at this very point over here, they decided, okay, we finished screwing around now. We are going to pump. We're going to take this price down. That's what this is doing. That's what this marker is telling you. So often when you see that left behind, bar change color, momentum line right down, extremely high probability. Now again, it doesn't mean the price is 100% going to go down, as we discussed. You know, it's not that black and white. I mean, this is we're dealing with absolutely unpredictable markets. I mean, that's just how the world of trading is. But it's your psychology, it's your thinking, it's your way of entering positions that is going to determine whether you're going to be successful, because it's going to also depend on your money management, you know, and the amount of trades that you're entering. So that's all going to happen there. So again, there we go. This market has moved. There's been significant volume pumped in here. It could be to continue the move down. You know, that was your start. That was your start to say, hey guys, this is the point. This is the point of where something has happened. Act on this point, but you know, obviously don't go crazy with your entries, and make sure that you have your stop in a position where it's not going to destroy your account. Simple as that. Okay, let's clear this out again. Okay, back to the indicator. Okay, yes, so this is what I wanted to cover. This is going to be really, really helpful for you guys. So these levels here, so you got your 12, let's just put this back to default, okay? So that's 8 and 10. So what you can do with this is you can say, you know what, I'm happy to enter positions when the price, you know, has entered this zone, but I want to make sure that I only enter positions when the price has retraced out of that zone. So like the example, I'm making it +6, -6, and 10. Okay, so I'm going to click on OK. All right, so basically what that means is you only want to enter positions when the price has gone out of that zone. Now, in saying that, doing that in this very situation over here, you will have some issues with some stops being taken out. Okay, so let's just be transparent about that. Okay, you're going to have, you know, entries like this, and then your stops are going to be taken out. Okay, so that will happen. Okay, but that's very often it's going to save you on your entry. So let's just scroll back anyway. I'm just going to go like this, there. Okay, scroll back. There's the price. The price has come over here. It's in this zone. Exited the zone. Okay, over there it did too, but momentum line. You're not entering positions when the momentum line is right with the price. Okay, you're just not doing that. You're waiting for a deviation in the momentum line from price. So you are looking at this. The price is back in the zone. Okay, now the momentum line is facing up, gold bar, green bar. You're watching this, Okay, now you're in. Okay, I cheated a bit because I saw this arrow. But you're basically waiting for a confirmation that the price is no longer within this support zone. It's actually broken out of that zone. And then, you know, entering a position. Same with the top. Look at this. I mean, look at the top section. I don't know what's going to happen ahead. There, price is out of the zone, broken free. You know, the momentum line's facing down. You only enter when that happens. Okay. And you keep looking at this. You keep looking at this, and you see how accurate that is. And when the price, let me just find a place where the price has like consistently just ran up, okay, as an example. Like this, you see on the right here, the price is consistently running up. It's running up. It had a very brief drop below the support area or resistance area, but the momentum line is still above the price, you see. So you're watching, it's in that area, it's in that zone, it's in that zone, okay, in that zone. You see how the price is just going up. You haven't entered any positions because the price is above that zone all the time. It hasn't broken below that zone. Now remember, the far right of the chart is what you're going to be seeing, okay? So this little drop here, it didn't happen. I mean, it did happen, but it didn't break from that zone because the price, if I'm going bar by bar, it just touched that zone and bounced up. Okay, now can you take a long trade there? Sure, but you have a very small stop. Okay, have a very small stop. Again, this is probably very quick. I mean, look at the time over here, 12:24:08, 12:24:20, 12:24:30. Okay, it's not hell of a fast. It's you got a minute or a few minutes if you're watching it. But have a look at, you know, the price has not broken down from this resistance zone. So you're not entering any short positions. Can you see how this helps you not enter short positions until the price has actually broken through this specific line over here on your chart? There we go. So there it broke through. Okay, there it broke through. As you can see, that's what happened over there. Price broke through. Okay, momentum line is facing right down. But remember, we've got cyan bars, so it's a bit of a iffy situation. But again, you've got a 20 stop, 60 target. I mean, that's what you're doing. 20 stop, 60 target. You've hit your target. Again, there's the price above. Above. You see how it's staying above, staying above, staying above. You had a few arrows. I mean, there's a few things that you could say, well, okay, this is a genuine push up to. The price is, failing to break through this level. Like, it's really like failing to break through. Look at that, it's bouncing off that. So, again, it could be little scalping opportunities to go long, even though your momentum line is down, but it's also stopping you from going short, you see? So there are definitely a host of ways to trade this. I mean, there it broke through, as you could see, but then you've got divergence lines. So you be careful. This is only going to be a short reversal down, which obviously it proved to be, but you still hit your 60 tick target. If you're going for a 20-60 target. There we go. The price was in the zone again. It's in that zone. You might have been caught out a little bit there, getting stopped out, but then the next one you can take advantage of. There the price is below, and there it's running beautifully down. So you can look at this move down. You see the price never went and broke through this upper support line. See, look at that, it's failing, and only there did it break through. You see, only there did it break through. So there's a few different things you can do, on this. There it screwed you a little bit, okay? But you had arrows to say, hey, okay, guess what? If you enter the short position, then you have an arrow in the opposite direction, you probably want to rethink that. Jump out of that position. But very often, as you can see, it's going to keep you out of positions and also help you get into positions once that level of support has been broken. And especially when you've got gold bars, momentum line down. I mean, we're talking about 20, 40, 60, 80, 100. Some of these moves are long moves. They are long moves. So, you can have different stops and targets. You can enter two entries at once, one having a 60 stop, 20 target, the other one having a 100 target and a 20 stop. I mean, that's also something you could progress to do, especially if you're trading micros. I mean, it's very little money you need to do that. Okay, so I mean, look, very often, as soon as that price finds its way through that second level of support, it's going to be successful. Same thing there. It just happens all the time. I mean, look at that. I mean, all the price is doing all day and all night is going up and down, up and down, up and down, and you know, that's what you can take advantage of. Okay, so I think I've covered that more than sufficiently. Notice how the bars now are more green, which means the buyers have like taken over this again. It's now in buyer's territory. So if you were in a short position, I would get out right now, because look, the momentum line is facing up. The bars are more green than they are gold. So wait for the next opportunity. I think that's everything that we need to cover in this. I just want to look at the settings, if there's anything else at the bottom here. Look back bars, don't worry about any of that. A lot of these things are, none of this actually works. You can put colors here, but it doesn't actually make a difference. As I've said, I've removed all the background coding for the arrows and stuff like that. You can change the coloring of these bars. Now you could even reduce this. You could make this a 5, you know, make it a 5 and a 10. You know, if you really, really, really want to be extra cautious on your entries, let's go to the indicator again, and let's just increase the size of those lines, okay? Support lines, let's make them 3. Okay, so let's make those 3. They stand out nice and bright. Watching what the price is doing, it hasn't broken through, it's still down, still down, still down, still down. You're not going to be sucked into any long positions. Over there, long, but momentum line is right up, but you're still going to get your 60 ticks. Okay, you're not going to be looking for shorts while this momentum line is way in the sky. But in a great opportunity to get into a position, price came and retouched that level, bounced up again. There, touched the level, broke below, in the zone, broke below. Yeah, I mean, there's a few different ways you can look at this, okay? But, you know, like this, I think that's a good approach to have if you want to, you know, limit your entries at specific points. Again, if you just want to use the indicator like it is, you can go template, reset. Don't forget to also create your own templates. You know, you might want to have a color scheme that you want to use for the bars, the coloring of the bars. I think, can you change the coloring of the bars? I think you probably, I'm not sure. You got that, but like the default settings are 8 and 10, you know, -8, -10, you know, same thing of there. You know, that's obviously a much smaller window to act in, but it also provides opportunities to enter positions. Okay, I think I've covered everything on this indicator. You know, I believe it's extremely powerful. Looking at the coloring of the bars, just the coloring of the bars obviously gives you a very good indication of who's in charge of the market. You know, if you see a green bar, there's a high chance the price is going to go up. If it's a gold bar, there's a high chance the price is going to go down. So even try scalping around the coloring of the bars. You know, if you see the momentum line facing up, and you see, you know, a gold bar, but the momentum line is still facing up, you know, little opportunities. Take 20, 40, 60 ticks out of that. You know, find something that works for you. You know, you might just have an approach that you are happy using. And like I said, any single approach that you use, if you just apply money management, you don't overtrade, you don't enter too many contracts. You know, if you got a $1,000 account, you're not going to go enter 5, 6 contracts, right? You're going to start with 1, and then you're going to be very careful with your stops and your targets. You know, and then you're going to build on that as you progress. Cool. I hope that was helpful, guys. Sorry, it's a bit of a long video, just over an hour. But I think if you could just apply what was shared in this video, make sure you don't squash your charts. You know, just get the positioning of it right. If you move the chart like this, and the momentum line is staying in the same position, you know you've got it right. okay? And then just trade it. Just trade it. Okay, guys, thank you so much. Cheers.